Good morning, team. It's 8:03 a.m. Chicago time on Monday, the 11th of September, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for joining me again. The market stance this morning looks like equities are stronger. The market's allocating to risk this morning. The Euro Stoxx 50 and the DAX lead the pack with being up 1.16 and 1.15% currently, followed by the Nasdaq, the Russell, the Dow, and then the S&P. The laggards today, RBOB off 2% almost. Gold is off $13.90. And the Japanese yen follows next. So gold and the Japanese yen and the U.S. bond are at the low end of the chart of my quote board. Again, the market's allocating to risk this morning. We gapped up overnight in the S&P 500 and have continued to hold near highs. The high in the overnight session is 24.75. Again, I'm quoting and trading the December contract. 24.75 is the high, currently trading 24.74 and holding there. As far as other news, the Hurricane Irma or Irma hit Florida as a Category 4 hurricane, doing some damage there. There's still the impact of what has happened in Houston, and those things are, having their effect on the energy markets. But overall, there isn't much to talk about. The U.S. dollar continues to get trimmed a little bit as traders are moving away from it. Crypto, China has made cryptocurrencies, has banned cryptocurrency exchanges, and is not allowing that to be something that can be openly traded in their market. That has hit the cryptos a little more. I want to move on to what's expected for the week. Today, we don't have much today. We don't have much ahead of us. In fact, the calendar is absolutely clear going forward today. Tomorrow, we get UK PPI, CPI, RPI. So again, a light day tomorrow. Not much in the U.S. session except for U.S. JOLTS job openings. That's the number of job openings listed here in the U.S. On Wednesday, we start to get a little more flow. German CPI at 2 a.m. Eastern. We get the ILO, UK ILO unemployment rate at 4:30. The UK is releasing a bunch at 4:30. The Eurozone at 5. And then the US puts out PPI at 8:30 and the monthly budget statement at 2 p.m. on Wednesday. So there's a little bit more on Wednesday. Again, nothing today, very little tomorrow. And then Thursday, as far as the calendar is concerned, the UK puts out its bank rate decision at 7 a.m. Eastern, and then we get CPI during the US session. We get ECB Speaker Weidemann. Again, another light day. And on Friday, pretty clear, pretty light. The Eurozone puts out trade balance at 5 a.m. Eastern, and then U.S. retail sales come out at 8:30 Eastern, and then we get industrial production at 9:15. And then business inventories at 10, as well as University of Michigan confidence prelim at 10. That's a mover, the University of Michigan confidence. That's it. This is a very, very light week, so expect, and on top of that, we have expiration quad witching Friday this week. So this is one of those weeks, regardless of the seasonality or time of year, this is one of those weeks where you have to exercise some caution and some patience in your trading. Trading expiration has always been tricky for as far back as I can remember. In fact, I used to always take this week off. And so I warn you that this week is likely to be jittery. Today, like I said, we have a gap up, which might give us some action on the open, a little bit of action on the open, but really, you need to be just very tentative this week. Here's what I expected on Friday. Friday's expectation is to come off of the low at 24.5850. Friday's recording was early, but to come off of the open and to immediately become responsive higher, looking for 24.6350. Initially, we were looking for 24.6150, which is the naked point of control from the prior day. So let's mark that here. There's your 24.6150 initial test. Consolidate, then push into 23.50, which is the MC point of control, which is right there. And then I expect it to get tangled and then potentially sell off into the close. That was the primary hypothesis. The secondary hypothesis is to make an attempt higher, fail to catch the point of control and hold it, and then start to move down into 24.53 and a quarter with a small rally upwards into the close. Again, here's hypo 1. Here's what actually happened. We open up, we test, we extend the low of the prior day of Thursday by a bit, and then we immediately push up into the 61.50, consolidate as expected, and then continue to 63.50, which is down here, 63.50, and then we just go sideways with a little sell-off on the close. So that's pretty much, plus or minus a point here and there. That's pretty much what was expected. On hypo 1, and that's exactly what happened. What did we do on Friday? What did we accomplish? So we look at the composite here, the area where the market traded, and we watch to see what did the market do, right? This is a pretty good exercise to see, did we fill in certain areas? Where did we auction on Friday? So we did a little bit of damage to the low volume node right there next to the arrow right here. We filled in this unfair area, and then we started to fill back in against the MC point of control, shifting the MC point of control down from 24.6350 to 61.75 and continuing to fill in at the LVN. So what we're doing is we're going from an area that was clearly necklined like this before, for those of you who recall last week, to an area that's much wider, much more balanced. So what we're doing is we're filling in like this. We're filling into the downside a little bit. This morning we're trading into the low volume node above. Very important to watch how this plays out up here in the 71 area. Does the market hold above the 71, or does it become responsive, fall through the 71, is unable to regain the 71, which puts 61.75 back on target over the week? Okay, so again, we have a very distinct acceptance and rejection areas still. And we're trading above the upper acceptance, the upper rejection area, the upper LVN, MCLVN. So we're trading through this low volume node zone, and we're up in this balanced day and the high of the year. And the goal here is to watch to see on the open, do we hold on to this area as a new fair area to trade, or do we roll over and fall below 71, in which case we would target the MC point of control, again, the black line down here. That's the map, that's the terrain, the context, and the map of where, how things are shaping up. As far as the overnight session, now, before I get into the overnight session, I want to take a pause real quick, big picture. This is last week. Look at how balanced this is. Look at how intensely balanced this is. Okay, so if you recall on Friday, I talked about the fact that Thursday traded in balance. If Friday's likely to trade in balance, Wednesday was somewhat balanced. Let's split this profile out and let's see how this week built itself. So there's the week. We open up, we sell off, and we immediately come back. We spent Wednesday, Thursday, Friday. Okay, Wednesday, Thursday, Friday, balancing. What I talked about is balance leading to imbalance, and I had talked about um, the fact that we are sitting here in a consolidation into a balanced zone, and we're likely, if balance leads to imbalance, so the next thing we have to look out for is the break, and we're getting that in the form of a gap up on the open. Not cool, but that's how the market is now. It doesn't give us an opportunity to jump on, but at least it gives us an opportunity to participate. So Tuesday we test down. I think I said Monday, but Tuesday we test down. We get good rejection. We talked about this last week quite a bit. We get good rejection. We come back into the MC point of control, and we sit at the MC point of control for 3 days. This is classic auction progress, and then the expectation is a continuation of what has already happened here, a continuation of that once the energy starts to dissipate itself. Once we consolidate and wind up and wind up and wind up, eventually a lot of the folks who are trading, who are forming this profile, one side is likely to be wrong, and we're likely to get an imbalance in that direction. So remember, that's the way the process goes, right? The market does this on daily time frames, on weekly time frames, on an hourly, on a 120-minute, 5-minute, 15-minute tick chart. We do this all the time in every fractal. So what was accomplished last week? Last week we ended up with a P-ish, that doesn't sound very good, a P-shaped profile. So here's your P. The market is rejecting lower prices very cleanly and clearly, very bullish action. And again, we are trading higher, 24.72 currently. This is a very standard process here. Okay. As far as the overnight session, here it is. We left a nice little gap behind from Friday's close. That's not the gap zone, but we have a gap from Friday's close. We open at 24.67.75. 24.61 is Friday's close. Overnight inventory is 100% long. And holding. The delta is not as clean as we would like it to be because of rollover. However, delta is positive as well. So overall, this looks like it is fairly strong. So the expectation coming in, we've seen this a lot lately. The expectation is we gap up. We gap up. There we go. So there's the all-time high, 86.75. So the expectation is we gap up. Oh, really need to move up. Here we are. We gap up, open auction, expecting a feeble attempt at getting into the gap close. The gap size here gives us a low probability of a gap fill. I expect this to consolidate and go sideways for a while, and then I'm looking for a test of this 24.76, push through, consolidate for a while, and hold steady up here. I'm expecting about 6 or 7 points of range today, from about 71 to about 77, 24.71 to 77. That's the expectation today. Now, remember, the reason for this, we don't see a gap and go, is we are still inside of the current profile. Now the other possibility is we open and we push up immediately as more shorts get squeezed coming in. We push up immediately. We get into the 77, consolidate, and then we have our failure later. Once we break the opening swing low, then I'm looking for the prior highs as areas to scale out, and I'm looking for a push down into the 67.75, and then I don't expect a a trend down today, but if it does spill the beans here on the short side, we're likely to come back and test the top of this range here at 24.67 quarter is the expectation. But really, I'm looking for this gap zone to remain open as it has remained open very often on a gap up. That's hypo 2. I'm not expecting too much range here on the downside. I'm looking for about 8 to 9 points from about 24.77 to about 24.67 or 68 in that area. Okay, so that's that. For those of you who did not, who registered but did not attend the AMA with Futures IO last Wednesday, that video is being put out today. I'll retweet it as soon as I see it, and we'll send it out. We'll do a campaign to send it out. I think there are some really important questions that were asked and a fair discussion on those questions. I think all of you would benefit. Thanks for following. Thanks for continuing to watch the Trader Bite, and please give me a thumbs up whenever you watch the video or have a chance. Good luck.